computer. All right, got it. All right, so now we're going to switch back to share. So that's a little cumbersome in that you have to switch, from my end, you have to switch back and forth, okay? So here we go. I introduced myself. I wish we could introduce all of you guys, but for the first time around, we'll just have to go with me speaking, and I will be starting the slideshow. Here we go. So we want to cover the real estate market update. It's a super fast moving market or information. So I feel I don't have the coronavirus. I feel like I have the information virus. I'm looking and looking and reading, and every time I formed an opinion, it has changed, okay? So please mute yourself because it changes by the hour, okay? So we go to recap a couple of real estate headlines, and we also talk about what are the best strategies right now for investors. And then we got some interviews and some experts. I'm happy to announce that I have Mike with Loan Depot, and I have Leo Clark with Creston Development, and educator and an investor for many, many years. So I wanted to do an open lines for question and answer because I really wanted to make it a little bit more interactive than what you guys are used to, okay? But we'll figure out the technical difficulties. So here it is. Did you guys try to time the market? How would that worked out for you if you would have wanted to try to time the market right now? Market timing is the enemy of investment success. You know, some people are just waiting and waiting and waiting to get a deal, to invest, to start. What's the right time? The right time is now, okay? So markets go up, markets go down, but successful investors are patient, and they know that the key to long-term financial security and success is riding out the bumpy periods and reaping the rewards that markets have always delivered. For 200 years, it's a tried and true method that has worked for over decades, okay? So we're into long-term investing. Some of us in fix and flip, or maybe even wholesaling, or some shorter profits, okay? But everything we want is on the other side of fear. Replace the fear with curiosity and keep learning. So right now, a lot of negative, a lot of fear is put into us, but practically our civil liberties are being taken away, and it's just not a very productive time. So now comes the other challenge, that I wanted to do a poll. So everybody pays attention if you're playing on your cell phone or playing with your dog or with your cat. So I'm supposed to launch a poll. Okay, so here we go. The first poll is, rate your experience as a real estate. Rate your experience as a real estate investor. Are you a newbie, own a few rentals, or have done some flips or some other, or are you very experienced? Okay, we're waiting for one more person. Oh no, there is a clock. Okay, so hopefully you guys can see that screen.
I did.
Okay, pretty big or? Okay, so I think, oh, it's starting off. All right, so we got about 2/3 of newbies, and and then was just skip. Own rentals are done in polling. Okay, so we have more newbies on the phone, so about 60%, and we have 2 people that are in between and 3 very, very experienced. So the very experienced hopefully you have a challenging question for me later on. And here we go. So we have, okay.
This poll number 2.
Yeah, and poll number 2. Okay, we'll skip this one. I think because the information was, so here we are. We're going to look at the real estate market. Okay. Is this better if I have it bigger?
Yes.
Okay. All right. So is it a good time to invest in real estate? It's
Yes.
always our question. How do we make money? Okay. So we came from a very, very hot market in February. We were up 8.5% in medium home price. We had days on market, 34 days or 37 days. We had pending sales up from last year and up from last month. We had we had a medium home price of attached for 450,000, up 9.5% nearly. We had pending sales also up in attached. We had sold listings up. We had active listings down. It was a very tight market. We had a price per square foot about $406 and up in February to $416. All right. So the little graphic next door is, hey, we'll pay asking price. We'll pay 25% higher. So if you are a fix and flipper, you know how competitive it is out there. So,
is this year over year or month over month?
This is, the first number is year over year, and then the second number is month over month.
Okay.
Well, not months. It's year. Sorry, it's year over year. Year over year.
Year over year.
And a half. Yeah. Everything is year over year. I just put the first number is the comparison. So that actually it was a very active November, December, January, February, which is unusual because usually in November and December we're slowing down. Okay. This one is not advancing. Okay. All right, here we go. All right, so we're starting in 2004. Okay, so just for, I'm glad I have this because I have for the newbies in the room. So we had increase 2004 through 2000, and we can't see below 2002, but 2002 we really went up and then leveled kind of off. And then if you have heard 2007 and 8, the real estate market lost about 40 to 50%. So a good time to buy was in 2009 and 2012. Then we went up from 2012 to, we were about a medium home price right around 300,000. We are now double that at about 600,000 within 8 years. So in 8 years, you haven't seen a lot of buying opportunities. The little small buying opportunity was right here in 2018, last half of 2018. This is it. But this number, hopefully you guys can see my cursor.
Yeah, I can see your cursor.
Yeah, I need to get a.
Do you know what was going on in 2009 besides the crash?
Besides the bottom of the crash?
Yeah, besides the banks and the foreclosures, you know what else was going on in 2009?
Enlighten us.
The H1N1 virus was spreading in 2009 rapidly, like what we got going on now. So if you remember, back when the H1N1 virus came out, we had way worse, as far as virus goes, way worse contamination going on than what's happening right now.
Yeah, Yeah, yeah. You see, I didn't, yeah, I know there was the end, but it didn't get a lot of press, nothing like
Like this,
now.
a lot more deaths.
We have a lot more death now.
No, H1N1 created more deaths.
We're not done yet with the coronavirus, but back to my, my fear and that the entire economy is paralyzed. So we're going up, 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 up. It's a steep decline. So investors had a hard time, obviously, cash flowing anything in San Diego. There were, the search for the misplaced asset, or if you're a fix and flipper, then you did well because, you were practically saved by the market again, okay? So we came up from all new highs. We had the consumer sentiment index was high. We had the index performance high, NASDAQ, S&P, Dow, everything was up, up, up. Small business optimism was also up. And the housing market, the home builder category, they were in heaven because they had very high numbers, and look, from the bottom of the recession where they have worked themselves up to current level is about 76, and it probably is higher in the West region. So just to remind you, it seems like it was 20 years ago, but it was just 21 days ago that all this was in full swing. If you all believe the media, right? So these are just graphs that show it to you, okay? So now this is where we are 21 days later, okay? The effect of the coronavirus, all key industries, and you guys have been following the news, everything is down from retail, leisure, energy, airlines, hotels. Some say, if you have seen the pictures of the 405 or Las Vegas Strip or Fifth Avenue it's certainly a change. So employment was in full swing. We had 273 jobs created, unemployment at 3.5. It was even at 2.8 up in San Francisco, okay? But if you look a little deeper, okay, so you already seen that in the beginning of last year, the job openings went down a little bit, okay, and the curve of people quit a little bit, and so it already started slowing down a little bit when we talk about the jobs, okay? So, and when I do my market updates for the San Diego Creative Investor Association, practically every other market update, I said to people, somehow we must have a recession soon, because if you look, every time the unemployment was at its lowest level, it signaled a recession. And I want you guys to take in that chart, because, and when it says April low, it's an old slide. I was scrambling to get this call.
Hey, Lenska, if you look at the economic indicators, the unemployment rate is a lagging indicator. It is not a leading indicator. So if you look, unemployment rate going up means that the recession has already started. So it's not, it's a lagging indicator, not a leading one.
Yeah, the red dots is if it's lagging for the recession to start, but to think about, that's what I wanted to say, that a recession is near, that is a signal. Okay, yeah, you're correct. So unemployment goes up, and that creates a recession. So, but we don't want, you see, everybody says we're supposed to flatten the curve. I don't want to flatten the curve. Yes, in the coronavirus, I want to flatten the curve, but I want to be ahead of the curve. So when we hit a recession, it's, you know, it's practically too late. Let me tell you, I can tell you how much money I lost in the last downturn, because I didn't understand much about real estate and cycles and all this stuff. Even so, the last recession was totally engineered. Okay, so it's and by the way, who just made that a very good comment?
It's Danny.
Danny. Okay, Danny. All right, perfect. Yeah. So great. So you can hear me, follow me, jump in, and that's what this call is all about. It's not about me really doing all the talking. So I'm just here to give you a little bit of insight. So same thing is with the, and I'm not an economist or nothing, but for months, they have been telling us that if the yield curve inverts, and that's all I can tell you, and maybe Danny knows more about it, you know, we also signals a recession. It's also a lagging one, like she puts it. And it doesn't, you see that the low part, the recession doesn't start right away. It actually always starts right when it comes back up, okay?
So the treasurer yield, this one is a leading indicator. So as soon as the curve inverts, it actually you can tell when it inverts, it actually signals that the recession is coming. So this one is actually a leading indicator. That's why last year when the yield curve inverted, people were saying the recession is coming, That's why, because people are freaking out about this. But that was 2019, not 2020.
Yeah. So these are just the graphs I have been, you know, telling people about and looking. And so I was surprised how much steam the real estate market still had left and was doing well. Okay. So here we go. Hopefully we'll waking up Mike with Loan Depot, because I love it when I have other experts on the call. And so we're in unprecedented times, and the Fed takes unprecedented action, 2 cuts outside the federal schedule meeting. Ha! Are you there, Mike?
Yeah, I am. Can you hear me?
Yes, perfect. Go ahead.
Well, that sports coat's a lot better looking than my sweat jacket. Yeah, anyways. I'm wondering when a haircut has actually become like a essential service. But
now, you don't
aside from that, yeah.
You don't have the problem. Last time I went to Target, there was no more hair color left. So in about 3 weeks, we all know what your original hair color is.
Yeah. I'm just glad I have some left. That's all I ever care about, and whatever color it is. But hey, thanks for letting me be on the call, and thanks for all the great information. I'll just try to stay in my lane on the mortgage side of it, and just kind of share what I'm seeing from my standpoint with Loan Depot. And we have some really good folks that share some really good information, and I'm grateful for that. But certainly every day is an adventure. And I was having a conversation even earlier, you know, to this question: are mortgage rates going up or down? And it's just they're functioning in completely surprising, well, maybe unique ways, at least to what we're used to, where mortgage-backed securities, mortgage interest rates, they get better or worse depending on what's happening in the bond market or what's happening with treasuries. And there was a decoupling and a disconnect with the moves. And the Federal Reserve Board's rate cuts has everybody believing that rates were getting better, and they were to some extent until the system was short-circuited, and credit lines got tapped and or at capacity, and then there weren't any buyers on the secondary market for a lot of product, and so things got kind of locked up. And so contrary to this expectation or perception that rates were getting better, they actually went in the opposite direction. I love and I appreciate Freddie Mac has some really good references on this, just in terms of trends analysis and interactive tools and all that kind of stuff. It's a great place to go just to see what's happening in the open market. But one of the conversations I was having earlier today was really interesting, just about how the volatility is creating a lot of challenges, and capacity is a real issue, and just trying to basically process all the orders that we're taking for lower interest rates and investment opportunities is a real challenge to the industry. just because, I mean, I think as a company, year over year, our refinance demand was up over 800%. And there's just only so much of that capacity you can process at one time. And our purchase volume was up too, which is kind of unique with the challenges with the inventory. But here was the really interesting thing, as we get updates every day, and I was looking one just before we got on the call about some pullback in terms of availability for down payment assistance on bonds and some tightening on the credit boxes with credit scores and loan to values and DTIs, and especially in the jumbo product, the non-conforming space above conforming limits, high balance limits above 7015. It's really tight out there. A lot of investors have it really stopped, serving, buyers with that product because they're not sure, what they're going to do with it, and the demand's super high. But I was thinking about this is a comment that one of my regional managers made. Says, well, look at what's happening. Is you got the mortgage industry trying to make loans at the same time the government saying you don't have to make a mortgage payment. And by the way, that nobody's really fully, vetted what it means when somebody doesn't make a mortgage payment. I mean, it's great if California or, Congress passes, a law that says you don't have to make a mortgage payment, but it still has real impact. And it still hasn't been cleared with the agencies on how that's going to be treated. So just a heads up, if I was on a couple of emails where people were saying, hey, guess what? You don't have to make a mortgage payment. Hey, just careful. I mean, it's still a late payment. It's still a default. So just a heads up on that. But where we're at today,
Mike, a question while you're on that topic right there.
Yeah.
If they are saying don't make a mortgage payment, from the president on down, and mortgage companies are going to start setting notice of defaults, how is that going to get corrected? How is that going to be played out where the mortgage payer, the mortgage owner, is not going to be penalized?
Yeah, well, hey, Leo, I'm not sure. Let me just say I'm the first one in line to say, nope, there's not guidance on this. I asked this to a couple different folks. Nothing, at least, is in writing. There's a lot of speculation is all I'm suggesting. And what I'm supposing, what I understand from seeing some of the releases was that they're not going to proceed with, foreclosure proceedings, but you're technically still in default, and it's not a performing asset if you're not making a mortgage payment, at least right now. But Fannie Mae and Freddie Mac, the agencies haven't said like, hey, guess what? In this time frame, because of these reasons, if you can't make a mortgage payment, it's not going to count as a late payment. And the implications really is okay, what happens for qualifying for a lot of folks going forward? If you take it as a free pass and all of a sudden you don't qualify if you have more than 1 times 30-day late in the last 12 months, then you might have just, cut some, borrowing opportunities off at the knees for folks that thought that they were getting a free pass. Now, again, if anybody has better information than me, that there's an update is that, hey, blah, 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 the president said, no way will this ever be counted as a late payment. Okay, and I'm hoping and believing that that's going to go in that direction. I'm just sharing with you, at least right now, the best I can tell, there's no written specific guidance that's going to give late payment forgiveness to every American that decides not to make a payment right now.
Wow.
I have like 4 or 5 different mortgages on several different properties and different banks, actually. They're not all with the same bank. And I've gone in to look at their policies for each and every single bank. And I've talked to several other, investor friends who's got, 10 of these things. And they've looked in, and each bank is posting different policies. It's literally like it's luck of the draw. Some of them are saying you have to, submit information about if you want a forbearance, you have to submit documentation. Some banks are free for all. You just submit a application. Some are saying that it's considered a late payment. Some of them are actually specifically spelled out on their website that it is not going to affect your credit report at all. They will withhold all negative thing for between 3 to 6 months, but everything is due at the end of the 3 to 6 month period, whatever you're approved for. So it's like literally all different all across the board is what I'm seeing.
Yeah. No, Danny, it's a great point. I mean, it's exactly, it's unclear. It's a Wild West, and everybody's, kind of shooting from the hip is maybe what I'm gathering from what you're saying. I do believe at some point there'll be some guidance on it. my only comment just along the lines of the mortgage industry right now is just be careful. And like you did, Danny, talk to your service providers and mortgage companies and make sure you understand what their policies are and get it in writing. Because again, the unintended consequences is some people might end up on the other side, not in the best place for qualifying for mortgages or refinances or investments, you know, if they thought that they were getting a free pass and they really didn't. So, but a couple other things, because I know time is short, and I'm happy to try to just get through a couple of quick comments. If anybody has any other questions, I'm happy to try to help answer those too. Just kind of where we're at today, I think, is interesting. Interest rates have been on a wild swing. I mean, we've had 300, almost 400 basis point swings, 3 to 4 point swings from opening of the market to midday, just last week. And it's interesting, the Federal Reserve Board's, mortgage-backed purchase, they're basically blank check for buying mortgage-backed securities, and their cuts, is kind of, having unintended consequences. Talking to our capital markets folks, and one of the weird, interesting things is that, capital markets, mortgage companies try to figure out, how to make commitments on interest rates in the primary market, and then they have to sell them. And then the Fed came in and, kind of basically blew out a lot of the hedges, and mortgage companies are trying to figure out, how to handle that, and reserve requirements come into play. And there's a whole bunch of stuff on the backside that's backing things up. But interest rates, I was just kind of doing some surveys and pulling through some different products today. We're still, 30-year fixed rates, depending on credit scores and LTVs and all that, 3.25. You can buy down from there on a non-owner just under 4. FHA and VA government loans were posting down at 3% par, and a 15-year fixed rate. You dip under 3% to 2.75. And what I'm finding interesting in what's called our rate stack is just the range of interest rates that we have from the high end to the low end, is that there's some really good buying opportunities on different coupons or interest rates. And what also is happening is that lenders, oftentimes when I'm seeing, especially on the wholesale side, they're not pricing up to lower the cost right now. They want borrowers kind of invested into that interest rate right now. And what's really interesting is I looked at literally a 30-year fixed rate, I think it was, a 3% 30-year fixed rate was the same cost as 3.875. And so it's really fascinating to look at the fact that you can get a really good buy, a good total lowest cost of borrowing, best total value, lower APR, if you work with somebody that's looking at kind of the rate stack and see what the market's buying, And here's why too, is because the industry is concerned that if you sell an interest rate that's too high, it's just going to be refinanced quickly. And why buy a loan that's going to be refinanced and you have runoff problems? So it's kind of interesting. A couple of things what to do about it. My high, encouragement recommendation to everybody is if it's better. It's kind of like it's different. Like investing, it's a difference between when you have to sell and want to sell. It changes the dynamic. Same thing with lending. It's a big difference between when you have to borrow and you want to borrow. So my encouragement always is get ready, get prepared, get in line, get pre-approved. Especially if it's a refinance to rate reduce, or if you're going to consolidate or do cash out to do an investment, to build an ADU or to buy another property or whatever. Just make sure to get in line and be ready and have your file absolutely complete. See if the agencies, by the way, are evolving with the virus right now in terms of how they're dealing with property inspections and some waivers. There's a little bit more flexibility with that, how we're handling verifications of employment. So those are good things because we're still trying to transact business, but super important. Just get your files and your loans in place well in advance when you want to, not when you have to. And then kind of watch and wait and see if the market settle down because, it's still chaotic. It's just there's spikes and dips and, I don't think it's a real price, but, capacity and supply and demand issues are kind of, pushing rates up higher than we would normally think that they ought to be. And I think they can settle, but the entire industry has to absorb, this absolute amazing, flow of business. So look for the other thing. So get pre-approved, get in a position, get in line. If you need an appraisal, order the appraisals right up front. There's a lot of savings opportunities if your loan's clear to close or if you're on a purchase loan. There's also float down options where if you want to kind of put in a backstop, get an interest rate protected against the volatility, and you might be able to float down, look for those. Take a look at the interest rate stacks and see if certain coupons can save you money. You know, and interesting, look for the product differences. Like renovation loans are better priced than cash out loans in many cases right now, and it's kind of interesting. And the last thing I'll say, the jumbo markets are kind of like wacky. And let's see, you know far more about this than me, but I'm interested. I was talking to an agent earlier today that said, like, out of the 3,500 homes on the market right now in San Diego County, nearly half of them are high-end jumbo. And it's interesting where the high end's kind of been stuck because there hasn't been a lot of financial products and options to help people, you know, in that area. And so I think it's kind of cropped off the top a little bit. Maybe there are opportunities there. Certainly opportunities. We've seen a lot of folks, because of their concern for income, you know, that might have to rethink their current transactions. And I'm seeing a lot of people pick up opportunities that other people left on the table. And more than anything, I'll leave it at this. I just see it now more than ever. You know, just crisis always favors the people that are prepared, thinking ahead. And I just love this conversation, Lenska, what you're doing, because that's what you encourage people to do. So do it in the lending space too.
Yeah.
I have a question for you real quick. This is all really good information, and I love all your suggestions, and that's really good advice. So my concern was obviously refining into a lower rate, you know, sounds like a great idea, especially when the rate is slightly lower right now. But, you know, you were just ranting off numbers. I think those are all lower than, you know, definitely a year ago or whenever. So my question is, I'm concerned about having these appraisers going into these homes.
Yeah.
Are they still doing appraisals, like in-home appraisals, or when you talk about a waiver, what does that mean, and how is that working?
Yeah, no, and I just actually got an updated email on this, on appraisal inspection options. So the first thing is, and I'm happy, here's a Fannie Mae letter that I just got. The first thing is look for, on automated underwriting systems on Fannie and Freddie, there's desktop underwriting and then loan product advisor. The first thing is, yeah, if you're in the process, get pre-approved and see if the automated underwriting planning give you what's called a property inspection waiver. Means that you don't have to have the property fully inspected. They can basically digitally verify and validate information. But the agencies are relaxing. They're I think it was more than half of the full inspections had been reverted to drive-by appraisals, even if you didn't have a property inspection. So again, I can get that out to you if you'd like to share it with the group. It's just an updated letter from the agencies on interior inspections, desktop appraisals, temporary appraisal requirements, you know, everything they're doing. There's some video appraisal options that are being tested. That had been happening before, where it's kind of fascinating. We'll get there because we do have digital appraisals, and collateralized underwriting is a really interesting thing, is that the agencies have been indexing values over the last few years to kind of try to, you know, predetermine, you know, what market value is, and try to, you know, kind of suppress volatility, at least from a lending perspective. But videos, I mean, they've been experimenting with sending, you know, basically instructions on how to have somebody do their own visual inspection with a video camera and send it back, which is kind of cool. So some of this stuff is expediting the technology around this. And so there's the agents are saying, hey, look, we understand there's a problem. You don't want people in the house. And we need help anyway. So, you know, here's 3, 4, 5 different options that we'll give you, Mr. and Mrs. Lender, on how to maybe handle it in a different way right now.
Right.
And I can chime into that too. You know, our board, CAR and NAR, they're giving us suggestions on how to deal with visual inspections and all that. But a lot of appraisal has been done on the desktop anyways and automated. My last 2 deals, actually, the appraisers didn't even come by.
Yeah.
So,
well, yeah, unless you're right. I mean, along those lines, even just, I mean, all this is fast tracking some of the technology, even on the signature side. I mean, really don't need wet signatures on a lot of documents now. It's really more of an issue with, you know, the recording offices around the country than it is. I mean, and agencies are just, they're getting caught up to all this right now, and this is helping.
And Mike, before you go, I realize my slide does not have your phone number. Can you please
oh yeah,
your phone number, and I'm trying to put it into the chat as well. So what's your phone number?
Yeah.
How can we get a hold of you?
Yeah, thanks. It's 619-520-9138.
38. Okay, perfect. And that's Mike with Loan Depot. Super appreciated. I know this market is changing by the minute, so
It is. So whatever
Yeah.
I just said, just disregard it tomorrow.
And that's why I have, by the way, that's why I want those calls on a weekly basis. So
Super smart.
because things, changing. Thank you so much for dialing in.
Okay, thanks, Linda. Appreciate it. Thank you.
You're welcome. All right, so let's see if we can get, all right, so now we're at corrections, contracts, Corona addendum. So obviously everybody wants to know how the real estate market is doing, right? So we're quarantined, for 2 weeks now? So real estate does not work or behave like the stock market, that it goes down or up on a daily basis. Actually, when this whole thing started, I was looking and there were no changes. There were still pendings, new listings, everything was just going status quo as practically normal. So now what you guys see here, as of March 26, we do see that properties falling out of escrows. I've been tracking the back on markets, or I have been tracking the withdrawn or canceled listings. And there is not a huge spike, but there is a little bit of an increase, but the activity is probably down about 60 to 70%. So these numbers are just, you see there, they're just so here it is. Who's the fairest of them all? Let's look at San Diego County. We had 3,138 in escrow, which was down 115, or -4% in 4 weeks. So the listings that were in escrow, or the properties, they still, here's a couple of reasons. Whether people still want to close, but now everything is delayed, or buyer and seller are fighting over the earnest money deposit, or if they have the right to cancel. So since this is not a day-to-day decision and the forms have to be filled out, completed, there is also a new addendum. It's called I got it right here, the coronavirus addendum, which sellers and buyers can agree upon. But for the transactions that were in escrow and that are now about to fall out, now, some people just out of fear might want to cancel, but they don't have really a contractual right to cancel any longer, other than that they may be scared. So now the seller obviously wants to have that house sold. So you will see, and it is increasing. In the last 2 days, I have seen an increase in the back on market, okay? But definitely listings are down. And all right, here's my daily activity on the MLS. So it's this number, the 101 number, used to be 350, okay? Price changes is usually double that. The sold listings is around 300, and the pendings was also around 300. So you see that these numbers, still our association does not want us to do tours or open houses, okay? And now the good news is, I just wanted to give you who's moving in and out of California. So we noticed that only the really good earners over 150,000 can practically buy a house now. And but those are also the jobs that are being created here in California. So we have a pretty strong job market. And let's see, we have a biotech market, which didn't get quite hit yet, because also remember, all seniors and everybody is on medication. We still have to produce those pills. I have not heard that anything that there is a disruption in the supply chain on that, in that aspect. Okay. And then, yes, we have tourism. It will hit San Diego pretty hard, but we still have our military. Okay, so there's a little glimmer, a little light at the end of the tunnel. Okay, now I have a poll 2. Let's see if I can pull up that poll. Here we go. Poll number 2. Oh, I didn't share the results out of poll 2. Okay, but I'm going to do so. The question is, do you think real estate prices will go up, go down, or stay the same? See, now I could play some music, but since I am technically challenged already with all this is going on, okay? So here we are. So we have 2 saying go up. Oh, here we go. Should I share the results? Okay, so you guys don't get the results. I don't see it on my screen.
No, I don't see it either.
Yeah, it says stop sharing results, but I shared it with you, but you can't see it.
Nope.
Hey, Lenska.
Yeah.
Yeah, I'd be curious to hear your opinion on not only which direction you think they're going, but which parts of the market do you think are going to go in which direction? I mean, do you see like no concern at the entry level and in the middle, and a concern at the high end, or is it going to be a market moving in the same direction?
I mean, this is uncharted, unprecedented territory. There is not one industry that is not affected on this one. And right now we're in trying to do the damage mode, but it's going to get ugly. So
it is.
Next month's next Monday's phone call, we have a better idea, because April 1st, rents are coming due, mortgages are running due. Do you see it now?
Yeah, I see it.
Yeah, so that was our result. So mainly say, so the people that say go up, they could have a point as in which seller wants to list their property right now, right? And if you really want to buy, and who wants to buy a property right now? If you're in a 1031, you're already, I mean, even 1031 exchanges. Burger King pulled down $1 billion credit to support or work with their franchisees. I mean, we haven't seen nothing yet.
Nope.
Okay.
Coming.
We're worried. Everybody is worried about the death rate and the infection and the tests and all that stuff. I have no doubt that medically wise, health wise, we're going to pull through like there is no tomorrow. But to take my, to take my beach away and close my gym, that is really hitting me hard. Okay, did that answer your question?
Yeah, sort of. Yeah, although if I would add, like historically, lower interest rates allows market values to go up because payments go down. And with the inventory being so low in San Diego, it just seems like there's going to be pressure on the bottom, and it's going to be active in the middle. It's just the top's getting cropped off still. Though. Or am I just reading that wrong?
San Diego will end up at 10% unemployment.
I think, okay, unemployment anyway. So what happens to all the 1099 and the gig economy, the Uber drivers? I mean, nobody is working right now.
We will end up at 10% or worse in unemployment.
I put my money on it. If everybody could file for unemployment, okay, let's say, not the unemployment number they're showing us. Okay?
No.
Really, I mean, right now, I think I have a number. I mean, 80 or 85% are right now not working.
Yep.
Okay, because this is how many checks are going to go out. Let's go the recap of real estate headlines, separating facts from fiction or frenzy. Okay, so we went practically from, I mean, when you're flying an airplane and your engine quits, what happens?
You go down.
You go down pretty hard. Okay, your prop might be spinning and your wings might be still flapping in the wind, and you might, you might survive, because I'm trying to follow him. So here we go. You know what I'm saying, right? So we have some good news. Tax filing dates, just for you if you haven't followed the news. July 15th instead of April 15th. That includes filing and payments. Okay, there will be no penalties.
Yep.
Also, the delay on the first quarter estimated tax payments. There are some deference of payroll taxes. And that is the newest. I heard this morning that you can carry back losses 5 years. So if you end up this year with a loss, you can carry it back and get immediately your taxes back. Okay. More changes are coming. They're working on it. Okay. Good news is, again, these are the people that are hiring. You see who else is hiring? Lenska Realty. Okay. So I am getting ready, because I know once the market goes down, a lot of investors would like to buy properties. So if you're an agent or a wholesaler or anybody else, I'm also looking for an assistant who can help me with these presentations and online marketing. Okay, so I don't offer benefits like Costco, but here we go. So essential versus non-essential. So in case you have heard, which yay, please all applaud. Realtors are actually essential workers. So here you have it, black on white, residential and commercial real estate services, including settlement services. So practically everybody kind of is back in business from a federal level, but your association, your city, your whatever you're affiliated with might override that. Like, we can do open houses and don't meet in person, okay? So if you missed it, we had a property walkthrough on Saturday. Yes, I have been on the internet. I have been working my little butt off. So we did a walkthrough of 2 properties, and if they had ADU potential, one was a very good fix and flip. If you're still in the market and you want to buy a fix and flip, let me know. We could write up an offer. It's still showing active. So then the 2 trillion coronavirus, it's not a stimulus package. I need to change it. It's a relief package, okay? It doesn't stimulate anything. It's just trying to make up for the losses we all had. So if you are a taxpayer earning up to 75 or single and 150K married, you get about $1,200 and plus $500 per child if you have declared it on taxes. So don't go out now and, so it doesn't work. You had to have the child on the tax returns. If you're head of household, you can make up to $112,500. So all is based on your adjusted gross income, okay? That is a certain line on your 1040 tax return. So if you make more than that, it will phase out up to a cap of 99,000 or 198,000 for married and 146,000 for head of household. So if you see that down here, that little line, it says 140 million households will get it. 93% of all taxpayers. IRS received 155.7 million tax returns last tax year. Average check will be around $1,523 according to Tax Foundation. Okay, that shows you how many people are suffering, 93%. So we always say the top 1%, obviously they're not suffering, but they're the ones that are making the rules for all this, okay? Here we go. We also, the unemployment insurance that's kicking in is pretty substantial, okay? So you guys have been watching the news. It's 100% of unemployment of your salary, plus a $600 federal assistance on top of the state level for 4 months. Some waiving of insurance companies for your co-pays, or what they're working on is to get the restaurants back in business. You know how you can't deduct entertainment at all, and your restaurant expenses only to 50% or less. And so they're going to change that in the tax law. So we're all going out for business. So this meeting pretty soon, when we get back to normal, will be in a restaurant. Okay. How they're dealing with the independent contractors and self-employed, that's a little bit questionable. I have not had time to look into it, but we are supposed to file for unemployment. I don't know. So small businesses are being supported too, but everything is tied to keeping your existing workforce. So there's a lot of fine print to all this. The whole bill has a big fine print for me. And the fine print is for me that the big corporations are going to be bailed out. I don't have a slide on it, but I've been saying this. This one is a debt crisis, and commercial loans were at the peak because the corporations have been using the cash and the cheap money they got to buy their shares back. Obviously, stock market is high, but they have some debt on their balance sheets, okay? So because if you can't survive, you know, a few days maybe or months without, if you don't have savings, and it's for anybody that has even rental properties, but up to corporations, you know, you're already on very thin margins, okay? So these are the banks that will defer payments, okay? And Danny made a good point. She researched, every bank will handle it different. It's not like they're giving you free money. It's just going to be forbearance or put back on your end of your loan payment. So you still need to kind of proof it up. Maybe not so much with Fannie or Freddie Mac down here. They have kind of the backing, obviously, from Fannie and Freddie, that they say to the servicers, hey, we'll give you the money so you can pay, and so they don't end up being stuck in the middle, okay? I have to hurry now a little bit because I just realized it. So auto sales, obviously, and you know my post, I posted it a week ago. I was flying over San Diego County and I saw all these cars parked on the Del Mar racetrack. Okay, this aerial picture I took, it was full with cars, okay? What does it tell you? There are no car sales, but car sales already also were going down. So, and to pay or not to pay rent. So we might do another call next, we're doing a call, and we might dive a little bit more into what to do with tenants, or because we only had 2 people on the call that had rental properties, and how to negotiate with tenants and what they can do and can't do, okay? So I'm skipping over this a little bit unless somebody has a question to it. And then we have Leo on the call because I think right now it's the best time to learn, to educate, to get ready, like Mike said, get ready to apply for your loan, practically get your financial house in order, okay? So, and for me, the longer the shutdown of the economy is going on, the worse it is. And that today I thought was, or yesterday was the worst day ever, because we were told to stay home for another month, and the economy is shut down for another month. So I've been working with Leo, I think 7-8 years. We do a monthly field trip together where we actually go out and visit properties and estimate rehab cost and decide, is it a deal or no deal? And if you signed up through our profit building meetup group, we used to meet at Denny's and talked about real estate topics, any aspect. And Leo, tell us your take on the market. You have been around, you talked to a lot of investors in the trenches. What do you see out there, and what's your recommendation for our newbies on the call?
Well, I see I got to update my bio here because this is 6 years old.
Oh, sorry.
A lot of things to take into consideration, especially for newbie investors. It is going to change, and it is changing as we're speaking, but it is going to change for the investors who are poised well to get really good price point on properties. Back when I was buying in 9, 10, 11, we had very, very good prices on properties. And whether or not it'll go that low, who knows? It's yet to be seen. But we will have prices, just in my personal opinion, based off of several indicators, we will have prices go down. And one of the factors of that I've always watched is whether or not the homeowner who's in trouble wants to sell or wants to stay. Because they came out with that home assistance program for people to stay in their house for quite a few years without making payments. If you remember, it was, I forget what the name of that program was, but that could be reintroduced very easily. So how do you get someone to sell a property to you that they can't afford, yet they're not making payments? That could be a big opportunity right there. And another area I see being an opportunity is the ones who have a lot of debt on properties, like investors who need to dump properties. Because if you have a lot of doors and you're not collecting rents and they don't have to pay rent by these new ordinances and these new laws that could possibly be coming out, you may see people who have rentals start dumping them. Very possible.
Yeah.
And
there's no other way than down.
Right. And another big opportunity, of course, is to watch the NODs, the NOD filings. Those indicators will begin to kind of paint a picture of the market in a way of what's actually beginning to happen. And you can get those kind of numbers from many different sources out there. But yeah, the NODs, and if you can pull up the NOIs, notice of intent, meaning that's before the NOD, then you can be ahead of the curve.
Yeah, but right now, the banks are not allowed to move forward with existing trustee sales or even file those notice of defaults.
But that is coming. That will happen.
Yeah, so that's why we say this real estate is a slower moving target.
Yes.
Okay, so we have to see first unemployment shoot up and people not able to make their, now we got mortgage payments and rent payments. In the last downturn, 2007, 2008, for the newbies on the phone call, home prices went down, but rents did not go down.
Rents did not change.
Everybody that had to move out of their house, they were obviously renting a place. So this time around, since we're all in it together, we will all go down together.
Well, no, because there was a lot of us that were buying a lot of properties, 9, 10, 11.
Yes.
So there are ways to prepare to become a buyer.
Yeah.
And that's where a lot of new investors should be focusing on, is how do I prepare myself to be a buyer, a true buyer, not just one, but buying like 10 a month. And that's where we were back in 9, 10, 11. So
Yeah.
being able to position yourself to be a buyer is well advised right now, especially for a lot of new investors that are asking that question. You know, do I build a buyer's list or a seller's list, or do I do I do marketing, or, you know, what do I do? Because for right now, we're in that no man's land. We don't know a lot about what's going to be going on, but there will be changes.
Yeah.
And if you're
there will be short-term changes and there will be long-term changes, and long-term changes it's just like what happened after the 9/11 terror attacks, right?
Yep.
The airline industry was down. We had a 4-day shutdown of the airline industry. So the market didn't go, or we didn't go in a serious recession, right? But it was kind of localized. But just so you have some numbers, the airline industry lost about, not the airline, it cost the United States, the 9/11 attacks, $5 billion. So I can kind of see how they came up with their 2.2 trillion, yeah. And when we only have seen a 6% unemployment, okay, and no, sorry, I have to go back. It cost the airline industry $5 billion, but it cost the United States, and that study was just finished actually in 2008. It cost the US nearly $6 trillion. So, and whatever was the 9/11 attack, I would say this, what we have going on right now, dwarfs that. So, but if some good news is gas prices are going down. So also back in 9/11, a barrel went down from $24 to $16. So what is it today? I think it was $24 again today. So it's pretty, it is. So again, too, I agree with you, you know, unfortunately, this whole crisis will be really hard on obviously the working Americans, and I think it will be worse for small businesses. So with all that said, we're going to have changes. So 9/11, now we changed how we check into airplanes. We changed how our security system works and everything else, right? So now with that coronavirus, it will change how we probably do business, which in some of it, it's great. I mean, we don't have to drive anywhere. We can actually see you guys. So next time I want to see some faces. So work on your pictures. So you also have to adjust. The market is changing. Are you? So next time I want to see a picture of everybody. So go out. You have plenty of time to take some headshots and get your camera working. Maybe buy a new computer and.
Hey, Lenska, that sounds like a great idea. Unfortunately, the hairdresser is not working right now, so I don't think that we're in the most flattering haircuts right now.
Okay,
the brow lady's not working either. So
okay, let me show you how you fix hair problems. Okay, this is how you fix hair problems. Okay, and look at me, you know. So, but yeah, so this is how we now communicate, and I prefer seeing people, and that's what Zoom is all about. All that money for you guys to see you, and otherwise I could just record a webinar. And so I'd like to open it to questions before we unmute all. So everybody is unmuted. Who has a question?
This is Danny. I was just going to ask Leo, since you have so much experience and you've, obviously been in the industry for so long and have done so many things. Well, so you're suggesting that the price will probably go down a little bit, or I don't know how much you think it's going to go down. What are you doing to prepare for this, and how, what are you planning to do to take advantage, I guess, in this?
Well, I've got multiple projects going right now. So from the standpoint of what price point we're going to sell at is still undecided. So I'm not spending a lot of money, or I'm not going to spend a lot of money in the design aspect. So I'm changing what we call line item costs. So instead of doing, high-end granite, we do a mid-grade granite. Instead of doing high-end flooring, we do a mid-grade flooring. So I'm reducing the costs of what it is basically going into the product, meaning the house, so that I can get, everything in line to meet that price drop. Because I still want to have my profits. And everybody should always be expecting to make a profit on a project. So I'm changing what goes into the product, meaning the home, compared to 2 months ago.
And are you just flipping, or do you do buy and hold as well?
Flip and ground up, new construction ground up. And I have 2 buy and holds that I'm subdividing the land on.
Gotcha. So
Now, if you can get a really good price, and that's something also that all new investors should always be aware of. We have a saying within my circles is, the money's in the zoning. So if you're looking at any kind of property out there, you should always want to know what the zoning is, right? Instantly. And from there, going forward with, what do I do with this property based off of what it's zoned for?
Are you going to buy more?
Yes.
In the next several months?
Yes.
And what are you specifically looking for? Is it just lower prices, or what?
We call it value add. So how to buy a property and add value, whether it's square footage,
multifamily.
No. Well, it depends on the zoning. So if I'm buying a property that, it now has a new zoning where you can build 4 doors and it only has a small 900 square foot home, then I'm going to tear that 900 square foot home down and build a 4-plex. That is adding value, number 1. And number 2, that would be a buy and hold aspect, meaning I'll build a 4-plex that I hold as rentals. So from the singular standpoint, if I can add square footage, if I can add a ADU or 2 ADU to the property, that's how I'm approaching the purchase. I don't want to approach the purchase from a standpoint of rehabbing only and turn around and selling it. That's not the way I'm looking at any property right now.
Okay.
I'm looking at properties on how to add value.
Okay, do we have any other questions?
Yeah. Hey, Lenska and Leo.
Yeah.
With your experience, just to go back, I'm curious about this, going back to 7 and 8 and the market adjustments there compared to now. Are you looking at inventories to reach a certain point where, for the cliche, it's a tipping point, or it's a buy sign? Because I just, and maybe you remember better than me, what was the kind of the inventory back in 7, 8, and 9 compared to where it's at now?
Yeah.
Okay, here's my saying. So first of all, location. It was very zip code oriented. Remember, wherever you have good school districts, the prices only go down 20-25%. The Carlsbad zip code last time dipped down 15%. Escondido went down 60%. Okay.
And Riverside was at like 70%.
Yeah. So anytime you have a market inventory under 6 months, it's considered a seller's market. So once we hit 6 months inventory, but these are all under normal circumstances, kind of. We have not normal circumstances.
pay attention to the NODs and the NOIs.
Yeah. Zaki, do you have a question? No? Okay.
Hey, hi Lenska, this is Ben. How are you? Good to see you again.
How are you?
Yeah, good. So, before this whole thing happened, I was planning to do ADU on a rental property. So I guess my question is, number one, is ADU still is it still a good plan, or would I be holding instead the fund to purchase when it's downtime?
Okay.
And the second one is I was expecting to use a HELOC on another rental property, and is that still a good option, knowing that it could be frozen at any moment, right? And that's probably for Mike.
Yeah. Okay. That would be a question if Mike maybe unmutes himself and can.
Yeah. Yeah, the renovation lending is, the pricing's, I said, in many cases better than cash out. And I've gone through a lot of scenarios lately where if somebody's planning the accessory dwelling unit, you're nearly better off doing the renovation lending than trying to kind of gap fill with the HELOC. Now, if you're in a great place with your interest rate and equity isn't an issue, and you know that you have your project costs covered with the credit line, it's not a bad way to go. What I'm seeing a lot of, though, again, at that point, there is a little bit of risk of HELOCs being capped, or limited. And I do think you're going to see more restrictions, especially with those second trustees. And as Leo and Lenska, you're talking about, if market values start to decline, those credit lines, they're going to cap them super quick. And so, the renovation lending, it's one loan. It's either to buy and to borrow to fix, and improve, or to refinance your existing loan, and then to do the accessory dwelling unit. That's just one loan. And so I think, just my opinion, just from a purely financial or lending standpoint, the renovation loan is a really good product to look at.
I see. Okay, thanks.
And Ben, I'm not sure how you're situated, or will it be an easy rentable, unit? I mean, people are going to lose their houses and they do have to rent someplace. Now, if you calculate your numbers and deduct about 20% of the rents you were anticipating, then if that deal still makes sense, then it makes sense. Okay.
Right. Yeah. I think this is in LA where, as you know, I have that niche market.
Yeah. Yeah. And
You're talking about a property in LA?
yeah.
I would be very, very, very cautious of buying anything in LA right now.
No, not buying. He owns a property and he wanted to put in an ADU on that one. So LA actually surpassed San Diego for affordability and everything. So they definitely need more units. And it's just another remark I have to make is we were told, build, and the whole ADU laws. And then on the other hand, we got this whole rent control thing going on. So I assume the states and government, they don't know what they're doing. And I feel like a little bit with that coronavirus, for me, it's just unbelievable how little they really actually talk about the economy that's going to happen in a couple of months. Do we have another question?
Well, I had a question on why the person thought LA was a worse buy area than San Diego.
He said be cautious, be very cautious. They have, as far as the virus goes, they have more people with the infection happening than they're right behind San Francisco. So I would be very cautious on watching truly what how the market responds to the amount of or numbers of infected or virus infected people. It's always, it has a ripple effect that could truly, magnify in multiple different ways, where if a neighborhood, and that's why if you watch the CDC website and see the neighborhoods that have the most infections, you'll be able to kind of look at it from a 30,000 foot view and say, holy cow, I may not want to be considering this neighborhood due to, underlying conditions.
But remember, real estate is not fast moving. So
No.
now nobody needs to make a decision in the next 4 weeks. This is really, you're supposed to position yourself. So Ben, he probably can he's going to interview maybe 2 more contractors and save some money, because obviously the game has changed. Some contractors are also going to go out of business. Unfortunately, guys, this is the era, this is the time where we're thinning the herds, okay? So that's why I'm saying make yourself, there are always tough times, but you have to be tougher.
Have multiple exit strategies.
Yes. And right now, multiple things you're doing. Anybody else we can help or give a second opinion on? Okay, if we don't have, I don't think I have another poll, but I have a closing. I think, I'm not sure if I'm done with my presentation. And so we will see you guys next Monday again. Hopefully I see it, but here it is. Be productive and be proactive. What gets me right now is everybody is blowing that coronavirus out of proportion. Has anybody heard one comment about what people are supposed to do to prevent getting the virus? Okay, I have been overdosing on vitamin C, orange juice, hot lemon water with honey. I personally believe in the isogenics supplements. They have something with B12 and really good drinks. Vitamin C, then exercise. Here's my other talent. I volunteer at the YMCA and teach exercise classes. This was really the straw that broke the camel for me, because I like to work out. I like to go to the gym. I like music, so I like the Zumba classes. So I'm right now, today, I jogged up the hill after an hour of work, put 4 or 5 online 7 minutes strong abs, 7 minutes strong legs on, and I was sweaty. It felt good. Okay, there are some driveway classes, and there is what I call the secret exerciser. So I feel like we're in the prohibition where it's not allowed to meet, and we still meet. So we have a few of us that stay 6 feet apart and still pump some iron. And study, read, research, get a new skill set, or work on your old skill sets to improve them. Write a business plan, listen to some audiobooks, and listen to webinars or Zoom calls like that. And then don't forget, you still can connect with the peers like us here through meetups. They all have gone online. Real estate clubs, don't forget, sdcia.com. Go on there. We have a really good webinar coming up on the second Tuesday, and lots of other classes to follow. Work on your database, seek out some mentors and some coaches. So here it is. I also do a great market update. I do that monthly. I'm not sure. I haven't made a plan yet. Definitely I will do one in April, probably after we've seen some fallout. You can see me on Meetup through our groups, and here is SDCIA. So I want to start a mastermind group that hangs out like this on a weekly call, so we can exchange what we see in the market, how we position ourselves, and how we're going to make a killing. I don't like the word loser. How do we make a lot of money in the next downturn? And here's my information. again, and I know you guys can't hear the,
Nope, can't hear anything.
yeah, I know, I'm working on that part. Oh, there we go, and I think this is it. If anybody has any questions, final ones.
Yeah, I have one final statement
Yeah.
to put out to everyone. I mean, I don't know how many are left here, but especially any newbies. I know people are sending, opportunities per se to everybody out there, email, text, whatever. Be extremely careful on these ARVs, because even if you bought a property today, you're at least 90 days away from putting it on market, which means you got to be forecasting very well 90 days from now. And you got to make sure that that ARV that they state is going to be in place 90 days from now is accurate. So be very, very careful on the ARVs.
Okay, I sent out one last poll. If you are interested in a real estate mastermind group. See if we still have people. Some left probably, since we said we would be. Okay, so there is some interest. That's what I wanted to find out. Hopefully you enjoyed it. And let's see if I can share the results. Okay, we got 100%. I like it. I like it. So it looks like a good group. I appreciate listening. Obviously, I wanted to keep it to an hour, but that was kind of my test to see how we're doing. And so let's all work on something and have more questions next time. Thanks everybody for attending, listening, sharing, and your questions. And thanks for Leo and Mike to get the expert opinions in.
All right. Thanks, guys.
Thank you.
Bye.
Thank you.
Yeah, and kind of. Oh my gosh. Yeah.
Yeah, that was Ian.
Okay, now I have to figure out where the leave the meeting is. I see it all the time. I'll end meeting. Okay, bye guys.
Bye.